It will be an exciting week. This is why we do financial news. How bad could volatility get, though?
Well, in a word, pretty bad, especially when you look at 2-week currency options, Sherry, which include, obviously, over the next 2 weeks, key events like the Fed September policy meeting and the BOJ as well. So we're seeing, these options showing a big uptick in vol compared to those that expired before or much later than these dates. It shows, though, that FX traders are incredibly focused on these upcoming events and are looking for protection as well. According to JP Morgan, the options market is asking for a hefty event risk premium around upcoming central bank meetings. There is particular concern about dollar movements around the Bank of Japan and Bank of England meetings in particular. So plenty of market action coming ahead.
We've been discussing today how in Asia, central banks have been seeing a sharp drop in their forex reserves as they deploy billions of dollars to prop up their currencies as the dollar continues to strengthen. Do you think investors should be bracing for more local currency weakness ahead?
Well, we talked about vol before, and definitely vol locally is going to pick up. In a nutshell, central banks in Asia are burning through cash very fast in a bid to slow down the losses of their currencies against the dollar. And in terms of the support for local currencies going forward, it could be much more limited, according to Standard Chartered. FX policies in Asia could turn less supportive as well. A measure of reserves cover, which sort of looks at the number of months of imports a country can finance with its forex holdings, has dropped to about 7 for EM Asia ex-China, and that's the lowest since the global financial crisis. Now, it was about 10 months at the beginning of the year, and as high as 16 in August 2020. So it just sort of shows you the sheer pressure local currencies continue to be under as the dollar strengthens.
Ruth, we've seen the yen gain a little bit against the greenback, 142.61 now, still pretty weak by historical standards. Well, what's going on here? Is all this intervention jawboning having an impact, or is there something else at play? And is intervention still on the table?
It's the perpetual question, isn't it? When people reach their desks in Tokyo, how do you trade the yen, so to speak? And the short answer is yes, we could expect to see potentially more verbal jawboning if the yen continues to weaken further. It has strengthened, as you said, Paul, but that's mainly to do with a big dollar move rather than a yen-specific move. If you look at currencies across the region and around the G10 world, everything has strengthened versus dollar. So plenty of watch still in the yen space. It could turn around very quickly.